Hey everyone, hope you're doing well. Welcome to The Loft and welcome to this week's video, which is going to be with the passing of July. We'll be looking at what's actually happened with my portfolio over the last month and seeing how it shapes up and what's happened and if we can potentially do some forecasting for August. Now, let's not delay. We might as well jump in and look straight at the portfolio, and we'll start with the value change over the last week. Here we can see that as of the 1st of July, I had a portfolio value of £3,038. with a return of around 13%, which worked out to be about £350. However, if we look through, we can see that at the end of July, so on the 31st, I had a new portfolio value of £3,157 with a lower return of 11.7%, working out to be around £332 overall. So overall, this is a drop of portfolio return of about £20 or 1 to 2%, give or take. And if we compare this to the VOO ETF, we can see that I did get a little bit demolished here, mainly because the ETF has grown nearly 2%, which isn't particularly good compared to my portfolio, which has dropped massively compared to that. So overall, not particularly happy there, though I'm not sure how much of that has been affected by the recent sales that I've made over the last month. While we're talking about sales, let's jump into some buys and some sales. And here there was a total of 7 transactions, with 2 sales or 2 companies that I've sold out of and 5 purchases for a total value of around £117. This includes the 2 sales, the first one being all of my 15 shares of ITV for a total of £17.26 and selling my 5 shares of Royal Mail for a total of £26.28. Following that, I did pick up shares in the following companies, which were Stag Industrial, Verizon, Altria, Amgen and Philip Morris for a total of around £160. And that was reinvesting the profits that I made from my positions in ITV and Royal Mail, as well as any dividends that had come over through the last week or so. And that is all well and good. But speaking of dividends, let's jump over and have a look and see what's happened there. And we can see that we have had a total of 20 companies pay out over the last month. These include Broadcom, Pepsi, PPL, Eastman Chemicals, Coca-Cola, Bunzl, Games Workshop, GSK, Altria, British Foods, Philip Morris, Cardinal Health, Main Street Capital, Realty Income, Pembina Pipeline, Store Capital, Stag Industrial, Simon Property Group, Cisco Systems and Comcast. So overall in July I did make a total of £12.26 through all of the dividends, which beats out the forecast that we had for the month by about £2. And currently this is the highest amount of dividends we've been paid in any single month, so a new record beaten there. If we try and do a little bit of forecasting and just have a look at what we potentially could be getting in dividends for the next month, we come up to a dividend payment ranging between £7 to £8, which is obviously slightly lower than we want. I'm not sure how much of that is due to some of the sales that I've made, and potentially I will still capture some of those dividends even though they don't appear on my spreadsheet. But overall, let's hope for a little bit more than that. But it is nice to know that we're at least getting more than a fiver, and hopefully we will hit the £10 mark, which is where my ideal goal is going to be for next month. So if we jump over to the portfolio sector breakdown, we can see that most of my sectors are actually near target with a rough variance of about 2%, except for my consumer staples and my real estate, which are both over target by about 5%, with real estate being roughly 10% over as it stands at the moment. This is naturally depressing some other areas, like hopefully you're depressing the like button. It has pushed down the following areas, which is consumer discretion and communication, both of which are down by a large amount from where they should be on their target. So I may need to look at ideally boosting some positions if there are any value stocks in those areas and spreading it out across the rest of the sectors rather than buying into the relatively heavily loaded one that I've got in real estate. If we jump over, we can also see that I have a not particularly great spread of actual companies that are relatively located in different countries. Mainly, you can see that there's about 75% of my portfolio across US stock markets, with the remaining spread across London exchanges and a few EU markets. Finally, looking across the main holdings for the portfolio, we have the top 5 positions, which is Store Capital with 5.8%, Stag Industrial with 5.6%, Games Workshop with 5.5%, Realty Income with 4.8%, and in 5th we have Main Street Capital with 4.7%. This is the current position of my top 5 positions, and they take up around a quarter of my overall portfolio on their own. So currently this is a large section of my portfolio, and we can see that a lot of my top 5 companies are also real estate companies, with 3 of them being REITs. So overall I have got a large amount of exposure, as we can see, to the real estate, with it taking up a large section of my portfolio as well as a large section of my top 5 positions. So I may need to potentially reduce some of that to avoid some risks in that area, potentially or possibly. So that's essentially it. A few more fun facts. We do have a rough portfolio dividend yield on cost of around 4%, and hopefully we'll be able to grow that over the next few months and few years, and we'll be able to just constantly grow that as companies continue to raise their dividends. If you're interested in seeing how my portfolio has developed over time, if this is the first time you're here, I would suggest checking out this playlist here, which documents through all of the portfolio updates that I've done since being on YouTube. And if there is a particular company you want to see me review, do drop it down in the comments below. And until next time, remember to invest, save, and subscribe.